Hey folks, Vic here with your weekly trade video. Last June, we started posting more trades using our advanced momentum trade strategy, which is a trade setup that was introduced by my Coach's Corner partner and our lead coach, Darko Ali. I just love this strategy because it uses the underlying trend of the market, so it's not only very powerful but extremely accurate. With just really fantastic reward risk potential, and you can use this on any time frame combination you want, long term or short term. In this video, I'll show you a couple of them from just this past week. These were day trade setups using the hourly chart for entry, and actually, there were 14 of them that I recorded and posted this week. Yeah, 14 just this past week. So, lots of opportunity, lots of examples for our members to look over and to take in. I hope that you enjoy the video, and if so, please be sure to hit the like button, subscribe to our channel by clicking the button in the bottom right corner of the video. Alrighty, let's take a look at these great trades. Okay, so let's take a look at the British pound US dollar, which was a really nice setup as an advanced momentum trade, and there was actually a lot of them this week. They just, funny how trades go. There's a whole bunch of them all, and then all of a sudden they dry up for all. Then a ton of them come. There was over a dozen so far this week that I've recorded and posted to our members' site. And a couple of them were losing trades, but most of them are all winners. I don't want to give the impression that these things never lose. They do, like any trade, but they mostly win. They're really good, and they trade the momentum of the market. Now let's talk about that. So this pattern was introduced by Darko years ago, our lead coach and my Coach's Corner partner, and so it's been around for a while. And as with any of our trades, everything's predicated on what the higher time frames are doing. So for this is a day trade using the 1 hour chart to get in on. We reference the daily chart. That's our main reference time frame, and we have to be in alignment with that, but we also reference what's happening on the weekly chart. That's the main ones, okay? So you don't want to be trading against the daily for sure. And so let's have a look at this right now. And in fact, you can see that here's the weekly here. It's just higher highs and higher lows as it's going up here. You see that? So that's good. This level rate in here, if you scroll this out a little bit, look at this. There's a really good level of support and resistance in here. Resistance, support. Almost touched it here, and then it closed above it here, pulled back a little bit and up, and we've hit it again. So that's just on a weekly chart. But on the daily chart, here's that same level right here, which was actually price came into this level of old resistance, which then became support and support again. In fact, look at these pin bar reversals here. These rejection wicks. It's a good clue that we could be heading higher. The one thing that you need to understand is advanced market flow, and this is something that Darko again introduced back in November 2017. And understanding this will change your trading forever. I promise you. It's such a powerful concept of how to read what's really happening, the language of the market, as Darko calls it, and it's a very powerful concept. So in this case, the advanced market flow is up, and basically we're looking at higher highs and higher lows and higher closes and all that. So when price came back to this level, if we go down to our entry time from the hourly chart, I actually pointed this potential trade out to the members in our chat room before it got hit. I try to do that when I can, but it's just that if I'm not around, I can't do it, obviously. But this was just confirming what the daily chart and the weekly charts were telling us, which was going higher highs and higher lows. And what we do is we want to, when price starts to rally up like this and close above these highs, we want to buy retracements. And there's different ways to do it. You can trade kind of minimum. We would have it be a level like here, and then you can go for deeper retracements like down here. These both got hit to the pip. This got hit obviously more than to the pip because it kept going down. If you take a trade on here, we use these lows down here, which we call a natural stop. And, taking it at this upper level up here, you need about a 35 pip risk. Taking it down here, you only need about a 21 pip risk. Of course, you never know if it's going to come down this far, right? It could stop right here and go up. So I don't want to give the impression that, you always go for the deeper retracement and you get filled, because you don't. Sometimes you can miss it. I prefer the deeper retracement because it gives me less pip risk and I can trade more lots. I like that. I don't like having a lot of pip risk in a trade if I can help it. And I'm okay with it, because you'll miss a trade. Sometimes it'll hit here, it'll hit this level, and just go straight up. In this case, it hit this one here, 21 pip risk. This is the level we were talking about in the chat room. And straight up. And actually, this trade here with that 21 pip risk went straight up and hit the target to the exact 1/10 of a pip. It was incredible. And that was worth over 80 pips. So about a 4-to-1 reward risk on that trade. Pretty good. And like I say, there was a lot of these trades this week. They didn't all make these kind of moves, but they all were almost all profitable trades. And again, they're all posted in our members area. I just show you one other one here. There was another one I pointed out as well on the New Zealand US dollar pair. And this one, like if you look at the weekly chart, when you learn how to read this, I mean, that's going down, right? Now, see this level here? I want to just show you this. This is an old neckline from back in 2020. And it's just one to keep an eye on. This is on a weekly chart because they're not going to go down forever. They're going to hit a level and bounce at some point. So on our daily chart, this is that same level. This level here that's on the weekly chart. We want to be aware of that. On this day, okay, we had not come close to this line yet. We're still a ways to go, so there's still room to profit. Okay, as price came down again the next day, this was the day that there was a sell set up in it. And if you go down to the boy, this kind of candle action, I'm just looking and thinking out loud here, is exactly the kind of very detailed price action analysis that Darko covers in his price action reading school. This was like absolutely textbook. In any event, down to the hourly entry time frame, okay, and by the way, let's just go back to this daily for a minute. This is obviously just in a downtrend. We're breaking all these lows. Everything's down on this pair, okay? So it's very negative, but we are hitting this level. And that, even as I'm recording this, you can see it's starting to react a little bit here. If I go to the entry time frame now, so this is what was happening, all of this in here, and chop, chop, chop. And as price started to break lower here and rally, there's a lot of little peaks and tops, like wick highs in here. So it's important to know which one to use for the purpose of measuring retracement levels to sell at. Okay, that's very important. This is all part of advanced market flow. And in this case, we had this drop and a rally. This was the first level to sell at, and then the second level. So if you sold at this first level here, and you decided not to go for the deeper retracement, which is totally fine, you need about a 30 pip risk, which puts it above this high right here. That's an important high right there. If you go for a higher level, okay, you need about a 19 pip risk, okay, to have that same stop in there. And selling it here still resulted in about a 2-to-1 down to here, which is the final target that we look for. That picked that up quite nicely, that low in here. Selling it up in here down to the final target gave about a 3.5-to-1 reward risk, so quite a bit more. That's the thing about selling it higher up, is that you not only have less pip risk, but you can get the risk out of the trade more quickly when it goes in your favor, because you don't have to go as many pips to get a 1-to-1 reward risk on it, and which is what we use to get the risk out of the trade. So yeah, I hope you can see the value, and not just the value, the power in these trades. But the important thing is that you need to do an impeccable job of price action reading, and that's what the advanced market flow is all about, and these advanced momentum trades, and we have a complete tutorial on that. But it's great, and even better is when we see our members take on some of these trades. So obviously, as you just saw, these can be very powerful and profitable setups. Like if you're willing to put in just a little effort, you can learn these, as well as advanced market flow, which is critical to understand so that you can apply the advanced momentum trades correctly, okay? So because they go hand in hand. And of course, we have videos on all of this at our members site. Again, please remember to hit the like button. There you go. I hope you all have a fantastic weekend and trading week ahead. If you have any questions on any of this, just please let me know. Alrighty, take care.